Hey guys, welcome to this week's episode of the Four Horsemen of Real Estate podcast. We've got some interesting topics that we're going to get into, including people that are losing money on top of money, stacks upon stacks, as they're selling right now and having bought not all that long ago. We're going to get into this and more on this week's episode of the Four Horsemen of Real Estate. Here's one of the things people say, that real estate never goes down. We have a listing here where the person had bought the property in 2001 for 1.55 million. And now they've just sold it this month for 1.25. They lost money after owning that property for 3 years. Now, is that possible? What I thought they said real estate never goes down. But the reality is that there are always dips. And if you're in a position where you have to sell because you can't afford to carry that mortgage, which we know a lot of people are in right now and have been this year. This is what we're seeing. People are willing to sell at a reduced cost just to be able to get it off of their books, just so that they don't have to pay the extra $5,000-$6,000 that they're more of their mortgage every single month. Or here's another great one. They bought it for 6.8 and they've just sold it a year later for 5.9. They've basically lost $1 million in a year. Now, most of us don't feel sorry for them, because if they're buying a $6 million house, clearly they've got some disposable income. But that goes to show you that even the rich are having a challenging time in this economy, which is why we can go back to, why did they change the insured rates up to $1.5 million? Because there are absolutely those that we would have called rich that are still hurting, and you want to give them access to cheaper money, because we know that, and they know that, a lot of these people take their money, they're either donors, they put it into the economy, they invest in other things, and ultimately, I don't want to go too far down this rabbit hole, but it sure looks like they want to make sure that those people don't lose a whole lot of money.
The government sort of lost their minds and jumped the gun on an increased cap in CMHC mortgages. They jumped it 50% from $1 million to $1.5 million. Which, well, by the way, one thing about that, every single association, mortgage brokers association, real estate association, builders association, construction association, they've been begging for an increase to 1.25, 1,250,000. And the government just soared past that. The reason they asked for 1.25, all those associations, is they thought that was pretty aggressive. And the government just blew through it. Sure, there's a big political consideration. It's all about votes right now for a failing government. But the bottom line is, they're worried.
What Ron's saying is very true. Do we need to be concerned? Yes. But I think at the same time, we also understand that there really was nowhere for prices to go but up over the long term. What they're trying to do is speed up the process here. By going up to 1.5, who's really impacted by that for insured mortgages? You're talking about the GTA, you're talking about Calgary, you're talking about Vancouver, you're talking about the major cities where prices are on the regular above $1 million, into 1.5, allowing room for them to grow into the 2.5 million, such that all of a sudden a $1.5 million insured mortgage gives people in that bracket more room. This is called stimulus. Lower, cheaper interest rates is to stimulate, to move the economy, because they have kept rates so low. They've included the carbon tax, they've hiked it up, they've done so many things to make it more and more difficult for people financially, that the entire Canadian economy is slowing and even coming to a halt. He talked about the building development. We know that there are developers that are currently going out of business, bankrupt, because they're not able to sell their properties for what they were making them for their carrying costs, what they're paying on the money that they've borrowed to be able to do those developments. So, to try to stimulate the economy, the Bank of Canada is now starting to lower rates even faster. They're probably going to have to go lower than previously expected. Not done it in this way and not waited as long, they might have had a smoother outcome, but they've sped up this process. So, what Ron's saying here, do we need to be concerned? I think we need to just realize the direction that things are moving, that by next spring, rates are going to be coming down significantly. We will more than likely start to see people pushing to buy again. Here's one thing for you to take into account. If you've got a lot of additional debt that you're hoping to roll into this mortgage, which is why you want to refinance immediately, there are other options. You can look into private lending on a short-term basis. Get a second mortgage, wrap up all of that credit card debt. If you're paying interest loans 22, 25, 29% or more in some cases, I know there are people paying as much as 30 and 40%. If you're looking to roll all of that into your mortgage, you can, in fact, get a private mortgage for a short period of time, 3 months, 6 months, lowering your current debt load on a monthly basis, and then refinancing as the rates are lower, which means you'll actually qualify for more at that point in time, pay out those private loans, and be able to move forward. Now, again, you've got to look at each scenario and make sure that your mortgage agent, your mortgage broker explains the benefit of it and the cost of borrowing, because in some cases the cost of borrowing will be prohibitive. So you want to make sure that it's going to be of benefit to you, so that then you get to take advantage of the lower rates while still having some breathing room right now over the next couple of months until you get those lower rates. If you can't hold out and you're not sure what to do, reach out to me, give me a call, send me an email, and let's discuss your situation and see what is available for you to private mortgages or alternate solutions.
When the ones around trust in their word, they walk the talk in the world of investment, they make their mark.